That's right, brother. How you been, man?
Doing good, man. Doing good. Just hey, this is I'm on the COVID diet, man. I'm down a good 20 pounds, and if I got a chance to take you out there and smack you up on the racquetball court, I'd probably be down 30.
Have you have you been out there at all lately? At all? Well, you haven't because
No,
it's been closed. It just opened up,
reopened the
right?
courts. Yep, they just reopened, and
Oh.
you remember Gilbert? Gilbert wants to play, and he said if I take him out, he'll hang up his racket. He won't play anymore.
What?
That's what he said.
That's pretty confident.
That's pretty confident. Last time, man, I had him wheezing so hard because he's got asthma. And
Okay.
he's like, "Oh, bro, I got to take a hit," And then he came back. He was all like, "Bam!" He was like a new man.
Oh shit.
I had him huffing and puffing like you can't believe.
Who still plays? Is Utera get out there still?
I mean, we haven't played in like 4 months. I mean, these guys
Right.
used to play like 3 times a week.
Yeah. Wow.
Not anymore.
Yeah, dude. I know. They just opened up the gyms this past Friday, right?
Something like that. Yeah.
Fucking
The ones that are reopening.
So how do you feel about that? Are you going out there, or are you going to wait a little bit, or?
I'm good. We what is it? It's June 15th. I think Arizona opened up like May 12th or something like that.
Yeah.
So guess what? When we have a chance, we just want to get away and feel normal. We just go out to Arizona. I mean,
Right.
it's a virus.
Right.
Viruses exist. Viruses mutate. Do you have to be cautious if you're compromised? Absolutely. Do you have to be cautious if you're around people that are compromised? Absolutely.
Right.
But the way it's kind of gotten out of control, I mean, it's out of control. That's my personal opinion, and that's kind of how I manage things. And
Yeah.
I just want to be out there living life, man, not living in fear.
Yeah. Yeah. Agreed. It's just it's crazy. I'm only I've known a couple of people that have passed. I've known people that
Yeah.
have gotten really, really sick, and I know it's a virus, like you said. It's just to see it get the way it's gotten. It's very it's shocking because it's never happened ever. You see it in the movies.
It's never publicized this way,
Right.
I mean, it's like, hey, you know what? Like before we had 24-hour news, we looked at things differently.
Right.
Now we got 24-hour news. We see everything, and then you got this virus now, and it's like, imagine if you said every time, hey, you know what? Did you hear? Tiny got a cold. Hey, Pitch got a cold. Everyone got a cold.
Right.
I mean, it'd be the same kind of hysteria. I mean, of course, I got friends that run, intensive care units, ER units. So, they'll tell you, it is a real thing, but so is SARS, and so is the bird flu, and so is everything else. So,
Right.
again, you can't live in fear. Hopefully you can build up the immunity, and it's like, it's tough, fear, you know how powerful fear is, fear will cripple you. It'll paralyze you.
Yeah, it's very
But I mean,
powerful,
I know people that left their jobs because they didn't feel safe.
Right.
And got no money, but they're not afraid to go out there and socially distance protest. It's like, oh, come on, brother. What's wrong with you?
Right. It seems like a lot of people don't care as much with COVID anymore because of the protests, and it's a little crazy out there, man.
But hey, they're necessary. It's been a long time coming, type of thing. And
yeah, it's good. I mean,
we grew up in it, right? We grew up in it. Maybe we look at things a little differently, but growing up in Carson, Wilmington, Torrance, we grew up with crazy diversity. So we didn't, maybe we just look at it differently, and it's like, what's wrong with you?
That's a good point, because when you think of Carson and Wilmington, it's especially Carson, it's very diverse. It's not just one culture. You have just about every different type of culture living within each other. I remember growing up, it was Mexican, Samoan, it was black, it was white, it was Filipino. It was a good mix of cultures, and you're right, because when I see all this happening, I'm like, what's going on with you guys?
Yeah, two of the 3 years in high school, Carson
Yeah.
was the most diverse high school in the U.S.
Right.
And
right.
I mean, and if you think about it,
Right.
think of our group of friends when we go somewhere. You know, we kind of look like the United Nations. You would never know.
Yeah.
You
But
know.
at the same time, I do understand the frustrations, man. I do
Oh, I get
understand.
it.
I
Oh,
get
I
it
get
because
it.
we were there. We grew up with some of that. We were part of the '92 riots.
Yeah.
We
Yeah.
we experienced that. So I'm for it. Protest and peace.
You know, I've had Redondo PD or Inglewood or one of the other
Yeah.
agencies, you know, pull a gun on us because they thought we were trying to steal a car, even though we were trying to just get into our own vehicle.
Right.
Now, we were respectful. We didn't talk back. We didn't do anything.
Wow.
So things went fine, you know.
Yeah. Yeah.
But I mean, I get it. It's tough times, you know. You
Yeah.
you can empathize, but you can't put yourself in people's shoes until you've been in them.
That's
And then
true.
we can say, you know what, we've been in them, you know.
Yeah. Yeah.
You know, to a point. Maybe we grew up in it, you know.
Exactly.
You know? And you know, I know every word in the book has been used, you know, either on me or by me or for me or whatever. But you know, we just try to keep it real with people.
Right. Right. And how has this affected your work, your business?
Man, so you know, there's the commercial side of the business, you know,
Right.
which you know, literally, you know, 3 months ago, you know, my focus, my specialty is on the hotel side and commercial.
Right.
Shut it down. A lot of people started kicking tires, kind of going, well, you know, I'm still looking at buying something, but I really want to cut back on what I buy, and you know, they're trying to like lowball people, and so that was crazy.
Right.
And then residential, you know, in terms of mortgage, you know, which is the more frequency. It's interesting because rates keep going down and down and down and down, but because of COVID,
all-time lows, right? Am I correct? All-time lows? Right.
But get this, because of COVID, you can't get an appraiser to go in the house, right? Because they're not allowed to. Because of COVID, you can't get a home inspection. So there's a lot. I mean, you could still do business,
right?
But there was that. It's just in fact, I like California Department of Real Estate came out with an actual disclosure form, right?
Right.
You know, to protect the buyers, the sellers, everyone involved, just because it got that ugly, you know. And to this day, you still have to use that form. Hey, if you're going to go into a house, you know, you still have to keep safe social distance. You're not supposed to touch anything. You're not supposed to do that stuff. And guess what? All that affects people's ability to either buy a home or refinance a home. I mean, it's pretty crazy. It is pretty crazy. It has had, you know, an impact, and it will continue to have an impact, even though now things are 75% back to normal.
Yeah, things are starting to open up now.
75%. We're not at that total, you know, just freedom and everything, but we're getting there. We're definitely getting there.
Nice, dude.
So,
well, brother, the reason why I reached out to you to be a part of this podcast is I've known you for a long time, and
yeah,
you know, you're from Carson. We're all from Carson, and you know, you started from Carson to a point where you went to El Camino College, and I remember those days, and I think I met you around those days, around El Camino College. I think we were both going to college at the time, and then you ventured off into real estate or mortgage, and I would love to hear your story, dude. You know, tell the viewers your story. We'd love to hear it. How'd you get started into it?
You know, it's been a fun ride. So, you know, I mean, right after, so, you know, I got accepted to 3 universities, right, out of Carson High,
right,
USC, UCLA, and MIT. I was an engineering student.
Nice,
and then
nice.
I kid you not, it was like I just kind of had an epiphany, and I'm like, you know what, going into like computers, boring.
Right,
so
right.
so literally ran into a friend of mine that got a job with Marriott, and went over, and she's like, hey, you know, come here. Got accepted into a program where I was an intern, so it was unpaid.
Okay.
And I'm like, oh, okay. And the funny thing is, I was an intern kind of in the due diligence department, where they study the demographics, you know, for building a hotel.
Really?
So it was
Okay.
I kind of came in like the back door of
Okay.
real estate. I'm like, I never expected that. You know,
Okay.
I was doing stuff that I got it because I was trained and I learned.
Yeah.
But it wasn't until like a year later at El Camino, like accounting 201, that I'm like, oh, that's why we do that.
Right.
Because I learned the concept, right? I learned the
Right.
accounting concept, but I didn't know it at first. So
Right. Right.
it's, I mean, and when we got into it, I mean, I bought that first house, 18, 19 years old, right? Close to my mom's. And
Right.
it was like 13% interest back then.
Wow.
And that was cheap.
Wow.
That was cheap money because it actually went to like 15, 16.
Wow.
So I'm like, 13. Yeah. I'm like, how am I going to pay this?
Right.
I'll rent a couple rooms to the boys,
Yeah.
That's literally how I started,
Yeah.
you know,
Nice.
and, hey, time goes on and frankly, I have had some phenomenal mentors in the business on the commercial and residential side, that always are like, you're a baby because I got into it at 18.
Right. Got it. Right. That's true. Okay.
You're a baby,
Right.
what do you know about money?
Right.
And honestly, I mean, I was like, yeah, they're kind of right. So I had to work harder to prove them wrong, to go, look, this is what I know. This is what I'll do. And I was always transparent. I was always good with people.
Yeah.
And they realized, like, you're very candid. You're very truthful. You kind of lay it out like it is. And
Right.
I mean, I would give people advice, I'd give
Right.
people advice on stuff, and they're like, well, what do you know? And I'm like, look, my mentors have shown me this, my family taught me these other things. And the way I finally looked at it, I'm like, you know what? Some of these people that were a lot more seasoned and older and more mature than me didn't know as much as me, because they
Right.
weren't willing to open their minds. They weren't willing to look at things differently.
Right.
And so I'm like, okay. And I mean, probably by 2021, it's like, time to buy another property, time to put what I said, into practice.
Right.
And I mean, it's just, I'm grateful. It hasn't been without challenges and difficulties and pain, but I mean, I'm just grateful kind of how I got started on the path,
That's awesome.
and because I was attached to Marriott on the commercial side, then I got all them perks of being able to travel.
Nice.
Which didn't hurt. So when we ended up in Palm Springs or San Diego or somewhere,
Right.
life was good. Life was good.
Nice. Awesome,
Yeah,
dude.
it's been and so you become, there's times you could be a teacher and there's times you could be a student. And so I always learned, and then fast forward to what, 2005, 2006, right? Now I've been in the business 15 years, something like that.
Yeah.
And I mentioned something to a friend of mine who is she's a professor, but she's also a statistician by trade. And I said, girl, things are going crazy. These values just keep going up.
Right.
I'm like they don't go down, they just go up.
Right.
and just, I'm like, you see some of these houses, and frankly, we're back there today, but we'll get to that in a minute. I mean, these values just keep going up and up and up and up.
Right.
And I mean, I said, this is what I kind of see. This is what's going to happen, and we're gonna watch these. Something's going to happen. It's going to change because it cycles, right?
What year was this? Was this before 2008?
It was 2005.
2005. Wow. Okay. Wow.
2005. I said, this is what I see, because at the time, I mean, I was a national lender, right?
Yeah.
Working under a national brand. I could lend in all 50 states, and I did.
Yeah.
And I'm like, and she had probably 6, 7, 8 properties. And she's like, no, I think you're right. So the statistician in her goes, let me run what you're saying and figure it out. I had said something like, we're probably going to lose about 25, 30% value.
Yeah.
She nailed it. She said, we're going to lose about 51% value on average, right? So people are going to lose that value in their homes, right? And that started happening that started happening, right? This was in '05 when we talked about it.
Wow.
So in '06, we published a book,
Wow.
right, talking about it.
Right.
And then by late '06 into '07, it started happening. And she said like
Wow.
51%, and it ended up being like 52.
Wow.
And I'm like, no way. So I'm going to tell you, I do not, I refuse to name drop, but I've been, that let this little kid from Carson do media, right?
Yeah.
CNN, Fox, MSNBC, Univision, everything, right?
Yeah.
So
Right.
I'm doing interviews in English and Spanish about what's going on in the markets.
Yeah.
And there's some, big names out there like, we know money, or we know this, or we know that. But real estate, mortgage in a way that we never imagined, we didn't know.
Right.
And you explain it that way to people, and we appreciate it. So I probably did 120 TV spots.
Wow.
Which was fun,
That's cool. What a great experience to have that, during the crash.
And the funny thing is, wow. it's not because we looked at it after the fact and said, oh, this is what happened. We saw it coming, and right. but these were also the times where, you did have some pretty creative loans out there. We were talking about it at dinner last night. It's like people would just literally state their income. Those don't exist anymore, but what do you do? Oh, I'm mariachi. Oh, okay. So what do you make? Oh, I make 30 G's a month. Really?
Oh, there we go. Okay, great. Let's get you a loan.
Exactly. And while I didn't focus on that stuff, I knew people that did, Yeah. And it's just like, and unfortunately, you know what? Those people, they bought homes that honestly, they were balling, but they couldn't afford it. They couldn't afford a $10,000 payment to live in a, $1.2 million home. Couldn't do it. So they were able to figure it out for 1 to 6 months. And then within a year, they lost the home.
Yeah.
So that's, and that's the crash,
Whew.
The crash in 8. And we felt it until, 11, 12.
Yeah. A good, that's true.
We felt it for a while, So some people say right now, oh, was that going to happen again? Not in the same way, because everything from 11, 12 to now has been fixed rate, and rates have stayed super, super, super low.
Yeah.
We've said for more than 3 years, we can't believe the rates are still this low.
Right.
Because historically speaking, they shouldn't be, but but they are.
Which is good. So, which is good for the first time home buyer, correct?
It's phenomenal. I mean, it's great because it's good because it lets them get in.
Yeah.
Right. It's tough because there's a lot of people out there that have this accumulated equity and that have money, and we're no longer just a domestic place to purchase real estate. I mean, we're global now. Yeah. So you do have money coming in from other countries, other parts of the world that are, competing with us.
Right.
And I'm going to tell you, there's other parts of the world where, they're not afraid to pool their money. You might have a family, you might have 3 or 4 incomes that say, hey, we're going to go in and we're going to buy this.
Right.
And we're not really good at that, here. So we're kind of operating on a different level, but nonetheless, I mean, it has been awesome. Girlfriend's daughter was over yesterday, right?
Mm-hmm.
And her and her best friend, they work together, and she's like, kind of thinking of what you've been saying. And she's like, I want in. Like, you want into what? She goes, I want into the family business. And I'm like, okay.
The family business.
Yeah. And I'm like, well, which side of it? She's like, this is what I want to do. And I'm like, I'm like, and okay. I said, so, had a seat on the couch. I'm like, get you something to drink. Yeah. You want a glass of wine, relax. And then it was like, bam, let's hit you and see if you're ready.
Yeah.
I'm like, you better start gaining some knowledge, because like literally, I mean, she just had zero knowledge. And I'm like, for all the times we've had discussions, you better start retaining some knowledge, because it's like the knowledge grows, it's like you build on it, you talk about it, you do things that way. And I'm like, you got to do this. I'm like, don't think that you're just going to walk into this and start making money. It's not going to happen.
Got to work your ass off.
You better, because if you don't, you're going to wonder why you ain't making no money.
Right, dude. So did you start working for a when you bought your first home? Did you start working for a real estate firm at the beginning? What was that path? What was that path like? You worked for a firm, or you just started on your own, or how'd that?
I like I said, I started working. I started working for a hotel company.
Right.
On the real estate side, right? I did some operations, but on the real estate side.
Right.
So I got to see that. I got to see my family, my mom and some uncles that purchased real estate.
Right.
And so I got to start meeting some agents, and it was probably probably actually not too long after 92, like 92, 93, that I started seeing some friends in real estate.
Right.
And I'm like, a lot of freedoms, a lot of stuff.
Yeah.
Again, not that it wasn't without struggle, but I'm like, I go, and some of them really, really good friends, and they're like, oh, they tell me their struggles.
Right.
I go, so what are you doing? I go, it just sounds like it's organizational. Well, I don't know. And it's funny because I started by helping a couple out that were good friends, and I said, well, what do you guys need help with? They're like, we just need to get organized. I said, well, let me look at your files. I look at the files and they're a mess, and they're like, we'll pay you $500 a file to put it together. So they were closing 2 or 3 real estate deals.
Okay. Right.
The month after I started putting their files together, they started closing like 7 or 8.
Okay.
Like it was crazy. And then after that, I helped them for a year. And then they felt comfortable enough, being organized now, knowing what to do, that they didn't need me anymore. But they're like, hey, you're good at this, man. You should do this. And then before I bought the next house in La Mirada, which was like the 3rd house, it was like, get my license so I can write, so I can have an offer, and get paid on my property.
Okay.
And then once I got paid on my property, then I just started, I started talking to people, and they're like, people will go with people they trust, people that are straightforward, people that aren't going to BS them, people that aren't like, oh, I'm just doing it for the money, And back then, there were a lot of people that just did it for the money, But you just do it for the money. Guess what? People see that. People read right through it, and realize that. I had the one guy, the one agent on the other side, that he flat out lied to me on the very house that I was buying. And had I not been licensed and knew what the laws were, I would have been in a world of hurt. But I was able to defend myself and talk to him and everything. So, everyone follows kind of a different path, because there's a lot of real estate and mortgage companies out there. But mine was just like, it was like a little bit of business, and then curiosity, and then self-serving for my own, purchase type of thing. And then I'm like, oh, well, let's just try it. It seems like we can do this, nonstop. And literally I had friends, like one friend would share with another friend, and hey, Bill helped me do this. Bill helped me structure that.
Right.
And I'm like, yeah, thanks. And it just grew. And it was 100% referral based, like just straight up, people were like, just straight, hey, you know what? Talk to him. He'll take care of you. He's busy, but he will take care of you. He won't BS you, and he'll set you straight. I'm like, all right, cool. And I talk to those people today. It's like our crew from like junior high and then high school and then, college.
Right.
I still talk to all those people today.
That's cool.
Those are my friends. That's the core of, who I am.
Yeah.
That's and we've cool. Lost a few, a few have passed away, for whatever reasons. And,
right.
And it hurts, because it's like, man, we're too young for this.
Right.
Can't be losing people at this age,
Yeah. Exactly. Jeez, man. It's yeah, I've lost a few people as well just throughout the years. It's just, and we're too young, man.
Yeah, you know.
It's sad, man. But
And
awesome,
now,
man.
it's like now I just lost a buddy just a couple months ago, right? Where
Mhm.
his mom, his mom's a little older, and she's like, this isn't right, She goes, I'm supposed to go before my son goes.
Right.
I'm like, I know,
Jeez.
and and I mean, we were friends from the seventh grade,
Oh, damn.
you know,
Wow. Wow.
from the seventh grade, and he was the baby of the crew,
Oh, dude.
So he was the baby of the crew.
Yeah, it's horrible, man.
So,
It's something that we're gonna see as we get older.
hmm
Dude. And where are you at Corona right now, right? You're living in
yeah,
Corona? Okay.
yeah. I had breakfast this morning, and then I headed to the office in Riverside, and
Okay.
there was so much activity going on at the office that I'm like, nah, I'm gonna go home and take this call because I don't want to be interrupted. Not
Yeah.
that people would walk into my office, because they wouldn't. They'd
Right.
look, they'd look through the window, and they know that I'm on a call, and they just won't interrupt.
Right.
So they're cool like that, but
Cool.
still, plus I got the corner office, so they're not going to bug me.
That's
But
cool.
I just didn't want. I just wanted to be, casual, and be at home, and just chill. So
Nice. So your office is in Riverside. Is that your firm or is it a firm you work for? Or tell me about that.
it's I have an interest in it.
Okay.
I
Cool.
have an interest in it. I'm not the primary, but I help them, and we are discussing a transition because we're licensed in California and Tennessee.
Cool.
We are planning to expand to Texas and Arizona. So,
Great
the
markets.
the initial partner is looking. He's been looking to move to Tennessee anyway, so he'll run Tennessee and Texas,
Okay.
and I'll run California, Arizona. You know, and
Nice.
it'll be a partnership, but still, it just makes more sense. So it's nice because in this business, you you can be independent, but he's one of these people that I literally met after the last crash, and he's like, I like the way you operate. I've heard you talk. I've seen you meet with people, and we've been kind of working with each other for a good 12, 13 years.
Nice.
There's a lot of people out there. Oh, I'll give you this, I'll give you that, but
Yeah.
I mean, you know the saying, talk is cheap. I'm not looking to make a move or bounce anywhere because, like I said, if I have an interest in the growth of the company,
Yeah.
why would I leave that? You gotta do what's right. We do what's right, And I mean, I've worked for the big firms. I've been a top 10 lender amongst like 30,000 lenders out there, and one of the big brands, out there, and it's just not the same, Yeah, you're rewarded because you produce, but you kind of get lost in the shuffle.
Right. Because it's such a huge corporation.
Yeah,
Huge firm.
yeah,
Yeah, that makes
you know.
sense.
But no, I mean it's all good, and then that's the mortgage side, and the real estate side is a family run operation, And again, we concentrate. We don't really do any active marketing or anything like that. We haven't in years, because after that last crash, it was just exhausting, you know.
Right.
But I mean, I work with real estate agents all over the state, and they appreciate it. They appreciate it because you're candid, and I mean, just yesterday I get a call. It's like I don't usually get calls on a Sunday. Like, hey, we need to help with a deal, and someone got pitched that they could buy a property for like $1,040,000, and they're like, oh, you can get in for 10% down. We'll take care of it.
Okay.
And
Okay.
we know this stuff pretty well. I'm like,
Nice.
10% down, send me to 10% down, $1,040,000 be 104,000,
Right.
And yet when the paperwork was sent over, the initial disclosure by that outside lender,
Right.
it said they needed 265 down, which was higher than it should have been. About 208, should have been about 20%.
Right.
So I'm like, well, why is the guy saying 10% down, but then his paperwork says 25% down? This guy doesn't know what he's doing. And
Right.
you think about it, I say, hey, Tiny, put an offer on this property, and you put a deposit down of $30,000, which this buyer did. That $30,000 is at risk if you screw something up.
Good point. Right.
Tiny, sorry, I cost you $30K. Well, what are you going to say? My bad?
Right.
It's not the way it works. You have a professional license. You have liability. You got to know what you're talking about.
That's a good point.
Yeah, I mean, there's people think it's a joke. Oh yeah, you got it easy. No, you don't have it easy. You got to pay attention.
And I think that also comes to the normal consumer out there that really doesn't understand the industry.
Yeah.
So for people that are watching, a real estate person with a real estate license, if someone wants to buy a home, they go to this person,
mm-hmm.
and then they would actually reach out to you. And why would they reach out to you? For a mortgage, to get a loan approved?
Correct.
Okay.
And it's, back in the day.
Right.
Back in the day, people used to just go, hey, real estate agent, take me in the car and let me go looking.
Right. Let's drive around. Let's check out houses. Right.
And so they would say, oh, okay. Well, as people got savvy after the meltdown, right?
Right.
They said, no, you need to talk to the lender. You need to be approved because, it's, so within the industry, sometimes people, I'll give you an example. It's because it comes up all the time, and I even made this rookie mistake a long time ago. I'm like, okay, so how do you do? Oh, well, we do well. We're thankful. We make $250,000 a year. I'm like, all right, cool. Based on that, you're going to qualify for this.
Yeah.
Once you gather the tax returns, you're like, but the tax return says you make $20,000 a year. Oh,
right.
Yeah, because I took all these write-offs. So, whoops. So you look
at the actual net.
You in many circumstances, you look at the net.
Right.
There's certain things you can add back, type of thing.
Right.
And so that adds a level of complication, and.
Right.
And then you have, let's say you have just a regular borrower, right? It's just a straight, wage earner, right? That gets payrolled. Those are easier.
Right.
But again, then you know what? And I'm all for side hustles, right? There's people that have a side hustle, have an extra business, or have anything.
Right.
But then they write that money off. So the person that's making, $50,000 has a side hustle and they took a loss of $20,000. Now they're really, the net is they're only making 30. And you got to know when you can and cannot exclude those types of business hustles. Was it a one time or what was it? And again, the thing, like I tell people, the common question I heard at our breakfast. Hey, bro, how much can you approve me for?
You hear that all the time.
I'm like, well, tell you what. I go, we're going to have two discussions here. One is going to be how much I can approve you for, and two is going to be how much are you comfortable paying. Those are two very different things.
Right.
Right?
Right.
So I can approve you for, 50% of your salary, but you might not be comfortable with that because you still got to live.
Right.
You still got car payments. You still got other stuff.
Right.
And, and I mean, there's been times where, I've had mom, dad, 2 kids and a cousin on one loan just to get them to be able to buy the house. Because, because you do have to calculate. You do have to calculate the other stuff they owe. Or you do have to calculate that they have $30,000 in student loans that have to be paid. You do have to look at that stuff. We're not trying to jack you. We're not trying to tell you, that and you may know, hey, you know what? Yeah, but I know I can do it. And the common one is I know I can do it because, the kid's a little older and they're each going to give 500 to 750 to help pay for the mortgage. Well, that's great, but kids are kids, and you get a chance to take that last minute trip to Cancun, and you're like,
they're gonna take it.
It's 750, so I'm gonna go blow 750 on it.
I'm gonna go take it. Yeah, as a kid, yeah, of course.
I'm sorry, Dad. I can't come up with the. Not Dad's gotta freak out.
Right.
How am I gonna pay this? So there's a lot of moving parts, and think about it. You've been a DJ, you like playing sports, if you're not practicing, if you're not on top of your game, if you're not, looking at stuff right all the time, you might not do it. So and I think the common one right now, and this is we get a lot of this stuff. A lot of people, right? They don't want to talk to someone. They just want to go online and calculate a payment.
Right. So
here's the funny one. It happens all the time. I won't give them any credit, but it's the Z company, right?
Mm-hmm.
Everyone knows who the Z company is.
I know who the Z company is.
We know who the Z company is.
Yeah.
And actually, when I was doing media, I met the guy that started it.
Okay.
So we've had some discussions, and it's funny. It's like, hey, take a look at this home. Look at all this data. Look at all this.
Right.
And then they say, oh, cool. Hey, the payment on this home is only $1,200. And so you look at it and go, cool. Then you call Bill and you're like, well, yeah, the total payment on your home is going to be like $1,700. What? What do you mean?
It said $1,200.
Yeah, it says 12,
right.
Because they purposely exclude taxes and insurance.
They
purposely do that.
Okay.
So, they purposely go, oh, yeah, your payment's $1,200. It's like, it's okay. I'll give you an example. It's like trying to go buy a car, right? What's the car dealer tell you? Well, what do you want your payment to be? Oh, well, I'd be okay if the payment was like, $350.
Right.
Okay. And then you look into it and it's like, well, wait a minute. You start signing the paperwork. It's like, well, wait a minute. The payment's $400. Well, yeah, but because you got taxes, man. It's $350 plus tax. Well, wait a minute. The payments for 7 years. I told you 5. Well, hey, if you want the car, that's what you got to do. And it's like, it's just, and there's just this whole, thing that happens. And so I call, in many ways, the Z company is like the car dealer that, hey, we just want to get you into it. And then once you get into it, you got low remorse kind of going, oh man, what, and who wants to fall in love with a house and then realize, oh man, I don't know if I could do this. Now,
I love that new name. I love the name, the Z company.
The Z company.
It's hilarious.
Particularly with doing a lot of the media stuff, you have to be careful to not disparage anyone, right? To not say something, but the statement I'm making is 100% accurate.
Yeah.
Those entities that are online, probably close to 100% of them will only present you with the principal and interest portion of the payment.
Okay.
So that, and they'll present you with, they'll present you with, so we do, you can do credit scores, back in the day you do credit scores down to 500. Right now you can do credit scores down to about 620.
Okay.
The higher the score, the better, the less risk to the lender, right?
So what do you look at right now for the people that are looking that maybe are wondering, do I have a good credit score or a great credit score to qualify for a loan? What do you look at? What's the bottom? What's the top?
Right. So the top, so if you're 800 and above, you are in the top 1% of credit scores in the country.
Okay.
And 800 above is an extremely low debt profile, and 10 years of not a single late payment in any category.
Wow. Okay.
10 years.
Okay.
So you'll hover in the mid 700s. If you've got good credit, you'll hover in the mid 700s.
Okay.
But once you got the 10 years of just phenomenal credit history with no lates, then you'll hit that 800. That's golden. You can go in anywhere on a house, on whatever, and you're allowed. Now you have a higher credit score, you're allowed to have a little more debt because it's understood that you know how to manage your finances, right?
I see. Okay.
So now that's not to say. So sometimes the credit score is lower, right? 620. They're lower, and it's not. They're lower because you just don't have a lot of history, or what we call a thin credit profile.
Okay.
You might only have 2 accounts, right?
Right.
So you have you have your department store account, right?
Right.
Your limit's $500, and then you have your starter credit card, and your limit's $2,000.
Right.
And the thing is that if if on the 500 you owe 250, that means you're using 50% of the available credit there.
Right.
And if on the 2,000 you owe 1,000, that means you're using 50% of the credit there.
Right. Right.
So if you go on the Credit Karmas or Experians or NerdWallet or any of those places, they'll tell you that your perfect credit utilization is typically under 30%.
Ah, okay. Okay.
So, and so we run a credit score. We can't impact the creded score, but we can give people recommendations. We can even run simulations when someone's like pretty close on a lower score on what it would take to improve the score. Like our system will tell you, it's like, hey, on that $1,000, on the $1,000 you owe to the credit card, you can get that down to 800. Now you're at a lower utilization, and your score will go up to this.
Got it. Okay.
And I mean, we hand that stuff out. Because people, there's a lot of data out there. The thing is that not everything that you read is going to necessarily apply to you.
Right.
And that's the tough part. So yeah, credit scores are from 620 up. If you're below 620, the truth is that in most circumstances, you're going to have a problem getting a loan, with the exception of VA loans.
Right. Okay.
Veterans loans, interestingly, how much money down do you need for a VA loan? Take a guess.
0?
0 is the number.
Wow.
And the funny thing is, you know what?
What?
VAs, they hardly ever default. It doesn't happen.
Really?
It just doesn't happen because there's this discipline, and there's this assistance that even the Veterans Administration will give that borrower if they get into a point where they're in trouble.
Yeah.
They'll help them. They'll restructure it. They'll do whatever to make sure that they're not going to lose a home. So there's just a lot there that we have to know.
Wow.
But and I mean, there's and you can do with them. You can do credit scores a little bit lower, but again, everything's unique, right?
Right.
I had a couple going through a divorce, right? Husband and wife. He's a commander in the Navy. She's a nurse. He's got an 830 credit score, right, which is perfection.
Wow.
She's got like a 590, right?
Oh.
Identical credit profiles, identical, except that she had some student loans on there, right, which was for their daughter, that the husband used to pay, and he said, "We're getting divorced. You're on your own." Well, she thought he was still paying them.
Oh.
Identical credit profiles. Now, that was an exception. We were able to show that why it happened and that she was a phenomenal credit risk. And so we got that excluded. But that's not normal,
Wow.
Where, I mean, I've seen people's credit profiles that, I mean, I saw someone one day, I'm like, you have had 3 late payments on something every year for the last 10 years. And I'm like, and it's, and again, life happens. I get it. Not like it hasn't happened to me too, right? Divorces, loss of job, loss of income, all that stuff happens. And it's like, oh, man.
But for 10 years?
Exactly. It's like, man, how long can stuff keep happening, bro?
Yeah. 10 years? Wow.
So it's kind of funny. All you can do is laugh, and and again, we're not judging. We're helping you out. We're
Yeah,
helping
right.
you out because you know what? I mean, the single biggest wealth generator for us is real estate. And so to me, it's like, doing the mortgage side of it primarily. I mean, I hold that key to be able to get people into a home,
Hmm.
and the joy. I mean, if I accepted every invitation to go to a housewarming or do this or do that, I mean, I'd never have a free weekend to myself. But that's cool. That is totally cool.
That's
So,
awesome, dude. That's
what's
fucking
funny is that a
awesome.
San Francisco hat you're wearing?
Yep. 49ers, baby. 49ers.
What's that?
Woo! I love it. I love it.
I was up there on a project, and I like big coffee mugs, so I'm like, yeah, that
That's a
sounds
beautiful,
like.
beautiful mug. That's what I need. I need a mug like that.
So
Dude,
yeah, no,
that's awesome, dude.
it's a fun biz, and look, the truth is, at the end of the day, people. First of all, it's to me, local is Southern California. You know,
No.
I mean, I've flown up to Northern California to meet with a client to get
Yeah.
everything done, to get everything signed. But the truth is, it's Southern California. It's and it. It's Santa Clarita, it's Palmdale, it's Camarillo, it's all the way down to San Diego, it's out to Palm Springs.
SoCal.
We've been out in Bishop before, we've been out in El Centro before.
Yeah. Yeah.
But the truth is that a lot of what we do, we can do locally. But we go out and meet with people, and frankly, we like to know that we're literally just a text or a phone call away.
Nice.
And people are like really cool with that, because
That's-
nowadays, there's lenders on the East Coast that try to do California, and you think about it, at 2 p.m. right, our time, it's 5 out there.
5, right.
If you're lucky, you can get a hold of them till 3 p.m. our time, so it's 6 out there. But beyond that, you're screwed.
Yeah, it's tough.
Because when you get off work at 5:30 or 6, and it's 9 o'clock out at night out there, how much help are you going to get? How much support are you going to get?
Not much, if at all.
Yeah,
And
so that's why California, and like I said, hopefully soon Arizona.
Nice.
We probably would have had Arizona up and running, but this COVID stuff hit literally right at the moment we were filing papers for it.
And Texas is a huge market. Huge.
It is.
I have a buddy of mine that lives out there, and excuse me. He lives in Cedar Park, Texas.
Mm-hmm.
And everywhere around him, there's constructions, there's shopping centers, there's homes being built. And I remember the last time I was there, I think a couple of years ago, first thing I thought of is this. Fuck, I need to get my real estate license and fucking hustle out here, because this is like a gold mine down here. And then my buddy's like, well, have you sold real estate? I go, no, but the opportunity here it's crazy. And they call it Little California, because a lot of people in California have been moving down to Texas.
Yeah. I mean,
huge opportunity.
So last night I was looking at something. I'm like, man, it was like 3-bedroom, 2-bath, 1,400 square feet in Oakland. How much? Just take
where? Oakley? Where?
Yeah, Oakland.
See that? How big are the rooms again?
3-bedroom, 2-bath, 1,500 square feet.
I'm gonna say 900,000.
850.
Oh, that was close. Okay, I got a good one for you, since you're in the business. Okay, what's the name of the city? In Cedar Park, Texas. There's a private community, gated. Okay. Square feet is about 8,000 square feet total.
Jeez. Okay. All right.
Home is about, if I remember correctly, because I took out the little flyer, it was a 6-bedroom home.
Okay.
3 bath. 6-bedroom home, 3 bath. How much?
How long ago?
Oh, great question. This was 3 years ago.
Between 350 and 475.
Ooh, 480.
Yeah.
480.
And the reason I bracketed that is because I know that the different communities out there have grown at different speeds.
Yeah,
And
spot on. 480.
I just talked to a friend of mine in Rockwall,
Mm-hmm.
which is 30 minutes outside of Dallas.
Yeah.
And I mean, the home is spectacular. The home would be, I'm not even talking coastal community here, right? That home anywhere. Okay. That home in the Corona Hills would be about 3 million.
Right.
That home out there in Rockwall, Texas is 550 today, like a week ago. And the thing is, it's not like they don't make good money out there.
Wow.
And then they don't have a state income tax.
Wow.
And I'm like, oh. So, I mean, mortgage and real estate, I mean, it's healthy, but you do have to know your stuff, right? You could have asked someone else, right? That same question, and they wouldn't have been anywhere close.
Right.
Oh, I
right.
don't know, or they might just apply, California principles and go,
Right.
oh, well, that's got to be like $1.5 million. But I know Texas,
Yeah. Wow. Dude,
No,
so
look, the key is, and then here's another thing. We see this often. A lot of people say, hey, I'm looking, I'm ready. And we tell people, I'm like, the last thing you want to do is be in a rush to buy a home, right? Because then you make an emotional decision, or then you feel like you're backed into a corner and you have to do something a certain way. And so we tell people, you know what, get ahead of it. Like when we run credit, that credit profile is good for 90 days.
right.
Get ahead of it. So if you're looking to buy, 2, 3, 4 months down the road, get ahead of it. Run the credit right now. Get your financials in. Get all this stuff in, because there might be something you need that, I mean, nowadays with online, you should be able to get statements and everything, quickly. But people are busy. People have to work. People have family. Parents get sick. All these things happen. So just, get it, and get it and just here, turn it in. Because if you wait till, Friday when you were driving around and all of a sudden you get all your financials to the lender, and the truth is that some can give you an answer right away and some can't.
Right.
But, like people ask me now, like even this morning, hey, what do you think I can, qualify for? And I'm like, well, you already own 2 or 3 homes. So that's what I said earlier. I can tell you what you qualify for. And I can tell you what payment you're going to be comfortable at.
That's a very good suggestion.
It's like, but I mean, I just tell people, I'm like, get your stuff in,
Get your finances in order. Don't rush it.
If things, because, and then, and I'll tell you, you get, and it's not an untrue statement, right?
Right.
Not an untrue statement, but, you get a lot of real estate agents, there's not a whole lot of supply. There's not a whole lot of homes available for sale.
There are. I mean,
it's relatively true that, I mean, there's not like this huge, crazy oversupply of homes, but there's also not a shortage,
right.
Unless you specifically say, oh, well, I specifically want to be in this area. So then you look at that area and go, oh, okay, well, there's 100 homes there.
Right.
Well, that's a lot. Oh, well, there's only your friend's gated community. Well, there's only 4 homes for sale. Okay, the less homes available for sale, the higher the price is going to be. Relatively speaking, it's supply and demand.
Supply and demand. Yeah, supply and demand.
That's just the way it's going to be. Now, if there's a lot of homes for sale, and I mean, then you just you got to know. And it's funny because we do have a friend in Ontario, California that another friend listed the property for sale, and he goes, I want $500,000 for the home.
Huh.
Bro, I love you to death, but it's a small home, and nothing in this area has been over like 430. And your place needs work. I go, but we'll play with it, and we'll see what we can do. And I'm like, I really think you could probably end up somewhere around 469. Sure enough, we were, an agent contacted them the other day. I think it was Saturday, and said, hey, we'd like to offer like 430. That's where things comp out. And it's like, that's just not going to work. You're going to have to figure out something else,
Wow.
And sure enough, the agent came back and go, well, I talked to my client, and they'd be willing to offer 460. Okay,
Okay.
we're 9,000 apart.
Okay.
We'll,
That's okay. It's a
we'll,
a little closer, but that's good.
we'll figure it out. We'll figure it
Yeah.
out.
Yeah.
And again, it's like, and it's like, so we had them over last night. We're like, hey, we're working on an offer, hasn't come through yet. And, and then we're working on someone else that wants to offer on your house, and again, but we're waiting on the financials. So see, those are examples of, people that fall in love with something but don't have their paperwork together. So the truth is, are you really doing yourself a service by trying to write an offer on a property and you don't have your finances together?
A lot of people do that, though. I can
A
see a
lot
lot
of
of
people.
people do that.
It's the car situation. Oh, I want that car. I can afford
Right.
it.
Right.
I can
Right.
afford it. And you realize that an extra $50 means you can't afford it,
Right.
which is the
So,
taxes. I
so
mean, it's tough.
what do you suggest to people that want to buy a home, aside from having your finances in order, your credit score? What what is a good amount to save up? I know it really depends on the cost of the house. I
It
think
does depend on the cost of the house,
so.
but I'll give you an example. Even a
Like
veteran, right?
in Riverside, the house is what
Mhm.
two 300. I think in Carson they're about 500 now.
Yeah, yeah.
So what's a good number? What do you?
So we had, let's say Carson, right? Let's say home, right? So a veteran, right? A veteran, let's say that they're going to get in no money down, right? But that
Yeah.
doesn't mean that it's not going to cost them money to close it. So we're going to assume a worst case scenario. The seller's greedy, or the seller says, hey, you know what? I've got a home that everyone's going to want, and you know what? Seller says, I'm not going to give you any concessions to help you with costs or anything, right? I'm not going to do
Yeah.
it.
Right.
So the cost might still be, for the escrow company, the insurance, for all that stuff, the cost might still be typically about 1.5%, right?
Right. Right.
Those aren't costs that go to the lender.
Right.
Those aren't costs that go to the realtor. Those are just costs that you have to bear.
Right.
So even on a zero down, that veteran might have to come up with $7,500. Okay. All right. Cool. Say that same home in Carson, right? Person says, hey, I mean, I've got, decent credit, this, that. So you say, okay, well, we're going to do you an FHA loan, right? 3.5%.
Right.
Well, 3.5%, right? Of 500. You're looking at what? 17.5, 17,
Right.
right?
Give or
Plus
take.
those other costs. So you, again, because you're going to say the seller's going to be greedy, so you might have to come up with like 22, right? 22K,
Ah. Okay.
right?
Okay.
The seller doesn't like government financing. He's not a fan of it, so he wants us to go in with a different offer. So we
Okay.
have different options, right? 3%, because I'm going to tell you what happens. The person that comes in with like the big money, right? The investor.
Mm-hmm.
The investor's not going to offer 500. The investor's going to offer 440.
Right.
It might go up to 450. And what's the story they have to tell? Hey, you don't have to wait. I can close in a week.
Ah. Okay. Right.
You really want to wait to have that loan written?
Wow. Right.
And
Okay.
again, it's like, you really want to wait to have that loan written?
Shit. Right.
Well, they're going to have to do an appraisal, and again, so there's a couple components there, right? Once you get into the deal,
That makes a lot of sense.
the appraisal, right? The appraisal is merely to determine value.
Yeah.
The home inspection is merely to determine the condition of the property.
Right.
And your typical home inspection might run $300 to $500, right?
Right.
So you might have turned in your financials, saved everything, gotten your loan approved, made an offer on the house, and then you get an appraisal back, and they say this house isn't worth it. It's not worth 500. It's worth 480. So now the real estate agent has to go back to the other side and say the house is worth 480. Now all of a sudden that investor that was willing to offer 440, 450 isn't looking so bad, huh? Because right? Because the property, and don't think they didn't know it.
It's not
Right?
looking so bad.
Or the home inspector comes in and goes, I mean, and this is what home inspectors do. And so you as the buyer, you're paying for that.
Yeah.
You're paying $300 to $500 for a home inspection,
Right.
and they see that there's a cracked foundation. There's broken windows, well, the heater's not working, interestingly, that's an interesting one. In the state of California, you're required to have a heater for the home, but you're not required to have an air conditioner for the home.
Interesting. Okay.
Little, you think about it, because, I mean, no one's necessarily going to burn up to death, right?
Right.
Technically, I mean, they might sweat a lot, but yeah, it's a safety and security concern.
Right.
So there's just a lot of things, but I mean, we tell people, we're like, hey, get your stuff together. The other thing we tell people is, whatever you do, if you're going to go buy a house, don't go buy a car. Don't go buy the furniture for the house.
You mean right after the house?
Yeah, they'll run the credit. They'll get approved. It hasn't happened to me, but it's happened to my colleagues. They'll run the credit. They'll get approved. They'll go buy the house, and they get excited and they go to, Ethan Allen or Ashley Furniture, and they spend $20,000 on furniture. And then it took a little while longer. It took a little while longer to get the loan finalized, because we were waiting on something from the seller or someone. We were waiting on something from someone.
Right.
So it's beyond the 90 days, and all of a sudden, guess what? We're required to update credit. And now all of a sudden, we see an extra $20,000 of debt for furniture. And we see an extra $300 car payment. And we go, what is this? Didn't we have this discussion? Well, yeah, but I was so excited because I got such a good deal because there was a Memorial Day sale.
Oh, my God.
Well,
fucking people.
You're not going to be putting that furniture into that new house unless you now get a cosigner.
Jesus,
or unless
man.
A family member gifts you some money, because now you're going to have to put more money down to get the debt down.
Wow.
I mean,
That's
and it's
crazy.
It's emotional. It's emotional, and it's tough. That's the last thing you want to do to someone is shatter their dreams. I mean, not that you're doing it to them. You're just the bearer of bad news.
Dude, so what do you say to people that want to get into the business, that want to get into not so much the family business with you, but just the business in general, real estate, mortgage? What kind of work do they have to do? What do they have to do to pave their way to actually be successful?
So both of them require licensing that's either state and or federal.
Yeah.
So, and there's a million excellent schools out there for that. And so there are face-to-face schools, but really probably 90% of the stuff out there is now all online. And you get the phenomenal tutorials, you get tests, you get all that. So, first and foremost, you got to do that. You gotta be able to get your license. And I'm going to tell you something. Both of them have extremely high fail rates the first time out.
Really?
So, yeah. I mean, those tests are designed to weed people out. They're designed to, some how you have sometimes a test and it has 4 multiple choice answers and
right.
And there's always like one best answer, but then there's 2 that are like, well, yeah, no, that's true. That's right. Yeah.
Right.
And they're almost right, but they're not the best answer.
Right.
These are tests that require the best answer. So, I mean, I know 4 people in the last couple months that have taken the test that have all failed.
Wow.
Because it's a tough test, and again, it depends on how you learn. So you got to take the test.
I took the test a very long time ago, and I passed it. And I passed it the first time.
Right.
It was easy for me because I studied so hard, and I never did anything with it.
Right.
Which happens a lot as well.
And the thing that I tell people, because it's actually, we had the talk with the kid last night and say, hey, well, if you decide to do it, are you gonna, so that's what I tell people. You got to study, you got to pass the test. Then once you pass the test, the industry standard, for mortgage and industry standard for mortgage is that, even if you got a deal right away, it's going to take you 30 to 45 days to close it. So you're not going to see a paycheck for 2 months.
Yeah. Right.
The real estate standard is that even if you got a deal right away, you're not going to see a paycheck for 3 months.
Right. Right.
So you also got to be a little capitalized for it, or have someone that's going to back you in case you don't make any money.
Right. Okay.
So those are important things. Now, in terms of, I appreciate it because I like to mentor people.
Mm-hmm.
So I guide people all the time, and they don't all have to be local.
Right.
Mentor people a little further out. Even though I think for training that type of thing, it's better to be like face to face.
Right.
Right.
That's true. Makes sense.
So it's just easier, to kind of look over their shoulder and go, "What about that? Oh, nope. Hold on. You just wrote something. You said something."
Right.
And that's one of the things is that, I'm very casual. I'm very kickback. I'm very chill.
Yep.
But I have the knowledge.
Yeah.
So I tell other people, I'm like, if you don't have the knowledge, you have to be very specific. You have to be very deliberate in what you say, because you can say something and misguide someone, and that's the last thing you want to do. You don't want to misguide someone. This is it's their home. I've seen people that were given advice that didn't make sense, and they'd already given notice to their landlord that they're moving out, and then all of a sudden, at the end, they can't move into the property. It's sad. Yeah, it's sad. You see stuff like that. Makes you want to cry, man.
Holy shit, dude.
But no, you gotta study. And then for the real estate companies, there's a million real estate companies out there, and they all provide some level of training.
Right.
And you gotta know what's right. Now the real estate companies, right? I've seen some that their commission is 50% of whatever they're going to get paid. So
50%. Okay.
There's some tough ones out there.
Wow.
They're like, oh yeah, but we're going to train you. Well, yeah, that's true. But, that's true, but that's a lot of money that you're giving up.
Right. 50%. 50% is huge.
Right.
Jeez. Yeah.
So, there's always a question, who has the ability, who has more. I ask people that all the time. Who has more upside?
Mm-hmm.
Does a lender have more upside, or does a realtor have more upside?
It's a good point.
Realtors make more in a transaction, but lenders have the opportunity to do more volume. So it really depends. Depends on how you structure your business.
That's a fucking good point.
Yep. All depends on how you structure your business. And that's the thing. It's a business.
Right.
There's a lot of people, hey, some people, I just made 20 grand last month. So they went and, blew some money. Are
you going to make 20 grand every single month?
And then next month they didn't make anything.
Right.
Oh, that's okay. I still got some money saved. And then the following month they don't make anything. That's all right. I still got some money saved.
Right.
Third month they're like, hey Bill, can I borrow some money? Why? And if you're one of the crew from way back, so sure, what do you need?
Right.
But like, if I don't know you, I'd rather you just say, hey, can you give me some money? Because I know I'm never going to get paid back.
Yeah. Yeah. Awesome.
That's human nature. But no, people can get into it. A lot of people get into it. You just gotta be smart. And honestly, the bigger network you have, it's almost like the better it is. But just because you know people doesn't mean you'll be successful.
Right.
You got to cut your teeth giving people good advice. And you know what? There's been several. All the time. I tell people, I'm like, look, you can buy that, but I don't think it's a good deal for whatever reason. There's a physical issue with it. It's
right.
Property is in an area that is subject to eminent domain. There's a lot of things that can happen, and again, I just want to disclose that could happen. And so, you can buy it and say it's going to be your forever home. But most of the time, most homes aren't people's forever homes.
Right.
You know, the family grows and they say it's too little.
Yeah. To get a bigger
Get
home
something
or
bigger.
get a smaller home.
Yeah.
Right. That's true.
Yeah. Or, you know, our parents, you know, had 2 stories and now they're older and they don't want 2 stories anymore. They want a single story.
Right.
Or they want a manufactured home, or they, you know, I mean, that's what they want, you know. And my mom went from the big house, right, to literally a manufactured home. She's
Right.
like, it's just grandma and I. What do I need this big a home for?
Right. There's no need for it after a while.
Right.
Makes sense.
Take that money, put it in the bank. So
True.
no,
Dude,
I mean, it's a business that is truly limitless, but you have to know what you're getting into.
So definitely get your license, get your mortgage license, go to one of the best schools, and then just go and get your you know, apply, go to somewhere, right?
People reach out to me all the time. People's kids reach out to me all the time. You know, it's like it's you know, like I say, you know, I'm an email or text message away.
Yeah,
Not saying that I don't call people back. I do. I talk to people all day.
Right.
But you know, again, you know, it's you can you can gauge people and know if they're serious.
True.
You know,
That's true.
I've had people that, you know, yeah, I'm gonna do it.
And they don't.
2 months later, hey, so how's it going? Did you get it yet? Oh, no, I got busy. I haven't done it. You know, a year later, oh yeah, I just haven't had a chance. If you haven't had a chance back then, you ain't gonna have a chance now.
I haven't had a chance.
You know,
that's the number one excuse that many people have. I haven't had the chance. Not yet. Yeah, not yet.
You had a chance to go to Cabo for a week.
Well, you know what? You're going to have a chance. I'm going to have a chance to beat you in racquetball pretty soon. That's what I'm going to have a chance in. That's what I'm looking forward to. That's my chance.
You know what? Never give up the dream. That's a good thing. You're positive and you know, and not to say, I mean, you're a tough player because your damn arm span covers the court. You know, that's the toughest part. So it's like, all right, let me make sure that I make you run, and let me make sure that I don't hit you. And as long as I can do those things, you're beatable all day long. You know, you got a good serve that I remember, but you're slow. You're slow.
I'm a little rusty, but I need to get out there, brother. I need to get out there. I haven't played since I think the last time I played you. I think was the last time. That was years ago.
It's been a while.
It's been a while. So
I mean, I've played once in a year.
Yeah,
that's it. I mean,
it would be horrific if I play you and I beat you. That would be bad. Just throwing it out there. Just throwing it out there.
Again, you know what? It is. I'm never one to step on someone's dreams. If you think that's possible, you know,
hey, dare to dream, Bill. Dare to dream.
You could be the little ant that could. You know.
There we go.
You can get to the top of that hill. I don't think it's going to be with me, but it's good to dream.
Dare to dream.
You know, it's funny how everyone's trying to take me down. Well, why is that? Because you know, when you're
you know why that is. You know why Gilbert says that. You know why that is? Because I'm not around. That's why that is. Oh, boom!
that boy. I mean, man, I got him wrapped up in a ball. He just laughs. He's like, man, he goes, you talk so much. I'm like,
oh my God, brother. Well,
it's just fun.
This podcast was fun, brother. You know, I'll thank you so much, dude, for sharing your story with us. Yeah, absolutely, it was awesome. Man. It was fun. It was a good time talking to you for the last hour, and you know, a lot of golden nuggets about your story and how you got into real estate and mortgage, and a lot of golden nuggets for all the people that want to follow that path. So,
you know, I mean, I hope they do it. You know what? I don't think my story's special. It's definitely, it's not unique. And I mean, come on, we live in a country that is nothing but opportunity.
Yep. Yep.
And if you're willing to learn from others, I mean, there's no reason why you can't do it. It's like, just and just above all, be humble, be grateful for what you have. You can definitely change your situation. I'm humble and grateful that I've had, and like I said earlier, I mean, doesn't mean I haven't struggled.
Yeah.
Doesn't mean I didn't crash, because hey, guess what? Divorces and do that.
Yeah.
But you rebuild and you come back stronger.
Yeah. Yeah. That's
So,
some good advice, dude.
I'm always here to help you, man. You know that.
Yeah. That's some good advice, brother.
Feel free to reach out, and people that are listening, again, feel free to reach out. It's not a big deal.
Is there a social media website, company website that people can reach out to you if they're interested, or?
Yeah, but of course I never remember that. I mean, we have crazy Yelp reviews,
Cool.
and again, that's a lot of what we use. I mean, Yelp reviews, all the different social media places. The company is First Lending Online out of Riverside.
Cool.
And again, I think people get to see the real story on what we're able to do,
Awesome.
And they're like, wow, and we've worked hard to make sure we take care of people so that they understand, what's out there.
Cool,
I mean, that's important.
I love it, dude. You taking care of people is really important. So one day I'm going to take care of you in the court, and hopefully that one day will come soon.
Keep dreaming, man. Keep
dare to dream, brother.
Dare to dream.
Dare to dream. All right, brother. It was good talking to you, brother. Much respect for your journey, for your hard work, and your inspiration, brother.
Absolutely. So, hey, hope to see you soon. And you know what?
Give me a date. Give me a date. I want a date.
I'm man enough that if I see you cry, you know what? I'll even bring a towel to wipe your tears.
That is that.
You're gonna need it.
Now that's a man.
You're gonna need it.
Now that's a man.
I will bow down and wipe your tears.
Give me a date and a time, and I will be there.
You got.
I know you guys played on Tuesday, so right now, give me a date and time.
All right. Well, wait. Right, as soon as we hear that the court's open, I'll let you know.
Let me know, brother. All right, brother.
All right. Be good.